Broadcast is now starting. All attendees are in listen-only mode.
Good evening, everybody. Can everyone see my screen and hear me? Perfect. All right, let's go ahead and get started. We'll start with talking about the S&P 500 like we often do. And remember, the purpose of these beginner circle webinars are so that people new to the websites, new to the services, new to Elliott Wave can get some questions answered. The format that they've come to take is we kind of go through most of those things covered in the market section of EWT or the market pinball wizard, and try and answer some of the questions that might come up while we go over those charts to give you guys a bigger perspective. But there's a lot of other places where you guys get to hear overview of the market, so we don't need to rehash all of that. So certainly if there's more pressing Elliott Wave or site related questions, you can certainly ask them here. With regard to the market, we have a very clear ABC move up that hit about a 50% retrace of this 5-wave move to the downside from what really looks like a major top. If by chance this is still trying to work its way up to a new high, it still has to be some part of, first of all, this is very, very large to be a reliable 4th wave, and it has overlap, so anything would need to count as an ABC up as a diagonal. So possibly, if we fail to hold support here in the 40-30s, and we'll zoom in on this in a minute, that it is possible to count this as maybe a wave 1 and a bigger retrace as a wave 2 of something that could potentially be a little bit more bullish. But I think that the bigger risk is that we are struggling to complete a very muted version of this slightly wider and very, very slightly higher C wave up for the parentheses B wave. We have a lot of resistance right overhead. We can count this as working on 5 waves up to complete. We have a nominal lower high to what could even count as complete for an ABC up into February, but a lot of those things that gave us, Garrett and I, at least some early signs of having moves to the downside, and we caught a lot of this move down into March. Those were looking for a bounce as a wave 2 or maybe a B wave inside a bigger wave 1, and some of those are starting to get higher than they should, and some of them indeed are already poking above that February high, like maybe AMD, in favor of similar extension for more of this B wave. But there's a lot of other things that we look at that look very, very complete and have not really gotten much of this kind of move down and just look like some nominal extension higher from here. And some of those charts are pretty concerning, and still a few other charts that we look at. We did a whole presentation when we were in Las Vegas on sector rotation. So there are some other things that we see that could potentially help drive further extension higher, maybe even beyond this 4,300 region, possibly even all the way up to 4460s. But again, that would probably need to count as an even more complex, A, B, C from here, because we already have a pretty muted 1, 2, 3, and 4 so far. So getting much more than the 4,300 would probably require counting this a little bit differently. And so maybe this is a WXY, and this is A, B, C of the Y wave, if it's going to accelerate beyond the 4,300 region. And then if that's the case, then we'll look at the microstructure and see how that could possibly continue to extend towards the 4465. But right now what I want to do is zoom in a little bit further on this structure here to just see what are the key levels inside this possible 5th off of the low from beginning of May, for a reliable further extension, at least towards that 4260 region. For that, we're going to go to the What's the Frequency Kenneth tab, and then we can see that same the ABC flat for a B wave, and then that same purple 1, 2, 3, 4, and now we're looking for the possible either ABC up, or really technically I think I'm going to change it because whether it might be a diagonal because it did get very close to overlap. but it can be a 5-3-5 ending diagonal. And I just think that the structure that we're seeing here, rather than getting an ABC up and then another B and a C wave, that this just heading higher as a third and then getting a fourth and a fifth, at least in the SPX. And we'll look at how that's different in ES. Still works. You either have a unclear ABC up that looks more like a WXY, or you have to squeeze in a tiny fourth and a fifth wave to get 5 waves up out of this wave 1. But you certainly look like you have 5 waves up in the third, whether you count it to here and an expanded flat as a WXY, or count it to here. So we'll just give this the benefit of the doubt as 5 up in 1, 5 up in 3. So we'll look for 5 up in that fifth, even though it could still count as a diagonal. But at the smaller degree, whether we count this as an A and a B, or the 1 and the 2 that I switched it up to, we really should hold not only this low here, but also this low here at 4109 now, and continue higher in either that A, B, and a C wave, or 1, 2, and 3, and then maybe getting a fourth and a fifth from there. Possible this fourth drops deeper and looks a little bit more like a B wave, which when we switch over to the ES in just a minute to look a little bit closer at the microstructure, you'll see that this counts better as an ABC. So I kind of forced this move as an ABC and looking for this to be an ABC. So let's do that now. Let's go to the nano counts tab and then go to ES. Oh, no, it would be under the micro counts tab. Let's zoom out a little bit more. I don't think on ES, I don't think it really makes much of a difference whether you count a bigger B wave and then a small C wave up and count the third here or the third here in an expanded flat. I think either way, when we look at this structure here, this is less reliable as 5 waves up as a leading diagonal and more like an A, B, and a C wave up for that wave 1. So because that looks much more clearly like an A, B, and a C wave for the wave 1, then I'm looking for, let me get rid of some of this extra fib stuff here and shrink this down so that we only get the relevant ones. Looking for this final circle wave 5 to also be the A, B, and C wave move up. Now, the alt that I have here in yellow is just that, not necessarily that this was the third, that I don't really think really matters as much right now, but the alt here in yellow is that this can be all of the A wave instead of being just the A of a bigger A wave, and that getting much past the 4224 region, closer to 4250 or 4260, and certainly if we stretch up towards 4300, makes it more probable that this is just completing all of the fifth wave in one go instead of getting another B and a C wave up. Now, maybe it gets the 4 and the 5 that we were looking at on the SPX, but we do have to be careful that if this is going to extend past 4225 to 4251 in the ES, that there's a greater risk that that is just completing A, B, C up for all of the fifth wave, and maybe that stretches to 4300 or 4333 in ES, but it doesn't necessarily have to. It can easily be completing all of that move. So that's also a good illustration of how I use some alternate wave labels on my charts. I'm not showing you an alt that goes drastically in a different direction. It's a subtle difference between the way that I'm counting this subwave here, this circle wave 5. So the same subwave structure at the parentheses A, B, C, either a larger one that takes us closer to the 4333 level, or finishing up that same move where instead of this being just the C wave of the parentheses A, this is just all of the C. So the microstructure here, we held a higher low over May 12th as a micro 1-2. If we're in the purple, it would be a lowercase 1-2 in lowercase Roman numeral if it's in the yellow. And maybe if it's in the yellow, this could still be part of a wave 1. I'll go ahead and put that right here. this might be just completing wave one of an ending diagonal, if that's the case. So this would be A, B, C up for wave one. Instead of a fourth here at the micro fork, you get a wave two. And then that would also help in this yellow potential to stretch it a little bit closer, if that's what it's going to do, to the 4300 region. So that's where we kind of look for the smaller degrees to give us some more nuanced clues as to what's going on here. You know, this can be an A wave of the purple wave 3. So if we can if we can consolidate a little bit more immediately down to the 4150 region in ES futures, then we should be able to pop up here towards the 4200 region as this purple micro 3, and then get another 4-5 into the 4225 level, and then get this B wave, and then get a nice bigger swing move up for that C wave up to here. If instead we pop a little bit higher sooner to 4180s, 4185 to 4190, and then fade back from there to the 4140 region, then that sort of implies that we're going to get more of an ending diagonal for this yellow C wave. But again, I want to point out that bigger risk of a more significant top forming. Not just at this parentheses degree, but that this represents a much more significant top that we've looked at. If we go back over to the S&P, go to this really macro tab, that is potentially representing a super cycle degree wave 3 top, and can get a much larger A, B, C move down over the coming decades that takes us all the way back, you know, to at least back down towards, you know, maybe 2011, 2013 levels. It's not all going to be in one shot, but, you know, there is some concern. We have seen things before where, you know, we have a setup for a drop. It should be just a degree, intermediate degree C wave, but there is still bigger risk in the market. Like perhaps this is already a primary degree A wave and a B wave, and we just get a lot more of a stretch down for the primary degree wave C of a cycle A wave that maybe doesn't come all the way down to here with a bigger yellow ABC move. Maybe it just stretches this move down into the 2400 region, and that is sufficient for all of a red cycle A wave. And then maybe it gets a more muted bounce, and then a C wave down, or maybe this is a 1-2 in the start of this cycle degree A wave. And so instead of being an ABC for the A wave, it gets a third and a fourth and a fifth. So I think that's one of the reasons why I've been very you know, persistent in trying to highlight the overall risk in the market, and that even if there is something potentially more bullish, that we still have this same ABC structure that is struggling to get one more high. And even if that is, say, an A wave of a primary wave 5 that is still trying, an A wave of a fifth of a primary wave 5 that's still trying to get A, B, C up to a new high, it's still going to need to hold a corrective retrace that can easily take us back towards the 3800 or 3700s region, and might not hold there. So looking at that as all of the divergences that are building and all of the other warning signs, I think is important. While at the same time, you can take a look at a chart like maybe a YM, the Dow, and say this does not count as complete into December, or certainly into a February high, as all of a B wave. You know, to get this as a completed move is a much more forced count as an A wave down and a B wave up. Not only that, but the Dow held relatively higher in a more proportionate 1, 2, 3, 4, allowing for a fifth wave. And a lot of the individual charts in the Dow that Garrett and I have been talking about in stock waves do have similar potential that allows for them to attempt more of this C wave in an A, B, C structure off the October lows that counts as a fifth wave, trying to get to at least some nominal higher highs over January 2001, or some of those might have actually made tops in October, November, December of 2020. And so off of this low, off of the March low, we have a potential 5 waves up and are trying to fill out and hold a corrective ABC retrace. There is room for this to maybe get one more drop here to the 32,800s as a better fifth wave down of this C wave, although it may not be needed. We might be able to squeeze in everything into this low. And so here's one chart where if we are going to be heading to higher highs, it makes a stronger case for it. So the risk exposure that I do have might be more heavily concentrated into some of the Dow charts that match this potential, or the Dow itself, or maybe some of the sectors that also have some similar potential that Garrett and I talked about with some of that rotation that some of you guys in Stock Waves have heard us pounding the table on. Comparing that with something like the NASDAQ did not get the same kind of drop into the March low. It did get more than what is reliable as a fourth wave, and is getting much more than what is reliable as a fifth wave. So I do think that the Dow counts better as either a WXY, where this is an ABC of the Y wave, or some things got a little bit deeper here and they can just count, instead of a W or an A wave here, they can just count A, B, and are getting the same muted C wave off of the March low that the S&P is. So that is implied here by the pink as the C wave. So go ahead and just add that in. And if that's the case, then instead of the purple ABC for a Y wave, completing the whole move, maybe at that 14,000 region, which is the 618 retrace for this parentheses intermediate degree B wave as a retrace of the 5 waves down into the October low as the A wave off the high. I think we can get rid of this because we certainly bounced more than the wave 2 and continue to go. We can get, if that's the case, this could still maybe just be a third, and can get a fourth and a fifth wave up to get a little bit more extension if that is the pink C wave. But otherwise, can be the same muted count here for the C wave as well, as 1, 2, 3, 4, and 5 waves up trying to complete, and looking much more like the ABC up for the fifth wave that we were looking for off of that May low in the ES. So a lot of more scary resistance here in the tech sector. Oops. But any start to a C wave down might end up being something like a leading diagonal that chops around and maybe rounds out this top a little bit more with a wave 1 and a wave 2, and then an A and a B wave inside the third, instead of dropping in a fast, impulsive way to start that move to the downside. Allowing a little bit more of a window for some of those other things to try and extend more in at least the fifth of that C wave. Let's check in on the Russell, and then we'll go to some of the other things that we talk about. The Russell dipped a little bit below ideal support, but I think that this is holding as either of these B waves, either the B wave in a wave 2, where this is all of the larger parentheses B, and we have 5 waves down, and this is A, and we're working on the A, B, C of a wave 2 bounce, in which case probably not going to get much above the 1850s, or that this is working on the E wave of a triangle. And that fits a little bit more with that purple structure that we're looking for in ES, for more of a C wave and then another B and a C wave up to complete that move. I don't think it'll take as long as I have this. I think if we're going to get it, it's going to be a lot quicker. So still filling out that triangle, I think, or at least heading up towards the 1850s as more of this C wave of the wider flat for wave 2, but certainly a lot of risk if any of these lows break on a lot of things. All right, let's move on and talk about oil. So far in what can be the start of an ending diagonal for the C wave of the Y wave, off of the April high, we have 3 waves up and then a possible micro 5 waves down, a strong bounce, but so far only 3 waves up, and stopped at a lower high, and could be trying to reverse over this 74 region, and at least probably heading to a wider flat, if not something possibly even more bullish. But you do have to contend with the fact that the first move off of this low was only 3 waves up. So anything more bullish is probably going to be limited to a diagonal to start out with, and because we do not have clearly bullish structure off of that low. And indeed, I'm looking down, but think we need to break the 70 region first for that to start a cascade. Moving on to natural gas. I don't know if this is still a 4th wave, even though I often say that white is my primary. I think that this really got low enough overall for the C wave that the nominal lower low here after this bounce easily could have completed all of the C wave in the green count. That said, we only have 3 waves up to start, so any move off of the low, if it's more bullish, is limited to a diagonal. So if this is a diagonal, whether it's a diagonal for the C wave and an expanded flat for wave 4, or whether it's just a leading diagonal off of this as a more significant bottom, we have wave 1 and wave 2, an ABC up for the A wave of wave 3, are trying to consolidate here in a B wave, and then can get a C wave up into this 270 to 290 region for wave 3, then should get a 4th wave that drops back down into the 240 region, and then an ABC up for wave 5, and then we'll need to fill out a bigger ABC to a higher low to have anything that we can start to project forward at a larger degree. Fred asks, just to verify, a C wave within an ABCDE triangle would not normally be 5 waves. Right. All inside a triangle, all of your subwaves should be 3 wave moves. It's very similar to a diagonal. It just has a diagonal has a skew upwards or downwards and is going to come as either a leading position or an ending position. Whereas a triangle is either a 4th wave or a B wave. Those are the only places you can have a triangle. And it's going to usually just consolidate sideways and not really have any kind of directional bias. Occasionally you can have a running triangle, but it's pretty rare. All right. We don't normally look at XLE. That's usually something that we cover pretty substantially in stock waves. I will use this as an opportunity for a plug in stock waves because we've been looking for this 4th wave for a while since we posted pretty publicly in the main rooms as well as on Twitter and on Seeking Alpha at the end of May last year that we were looking for an imminent top to an intermediate degree wave 3 and looking for a larger ABC consolidation for a 4th wave. After the sharp initial drop that was minus 30%, we were looking for a bounce as a B. We got a clean ABC up, but then only 3 waves down from that, which was the ideal B wave, and then got more of a bounce than we wanted to see if this was starting an immediate start to a C wave down. So a lot of things got this higher, nominally higher high as a B wave. Some things didn't get a higher high, but they still count as a B wave either way, and are filling out 5 waves down for the C wave. Because this took now the better part of a year, or actually, I mean, if we get into the beginning of June, then it will be a full year. After that initial sharp drop, getting an ending diagonal that takes things very much sideways, then we can finish this as an expanded and running flat, and do not need to get all the way down here to the more ideal 38.2% fib retrace of wave 3. We can fill out within the trend lines as a wider expanded running flat and hold somewhere closer to this 69 to 66 region as a more ideal bottom. And then we're looking for a nice swing move from there as a fifth wave up. Let's move on to the metals. I'm going to zoom out here to this guy. So we've started to post a few early potential bottoms and wave setups for some energy names, looking for the start of that fifth wave, but most things really look like they should get a little bit lower. So we've been following those moves down, and we'll be posting a lot of those wave setups for some of our favorites, probably within the next week or so, maybe 2 or 3 weeks, we'll see. So gold, counting this as an ending diagonal for a primary degree wave 5 off of the 2022 lows. I think this counts best as an ABC up for wave 1. Was much more shallow and short-lived as a wave 2 than we normally see in a diagonal. But our 5 waves up as an A wave came right to the resistance region that we would expect for the A wave inside the wave 3. And we're getting a nice expanded flat into the higher fib support region for a B wave inside that third. I have this in blue. It's one of my color coding schemes that I try to use for emphasis for the subwaves in a diagonal, showing you that even though they're ABC moves, or that even though it's a 1, 2, 3, 4, 5, that the subwave structures are ABC moves. So that's why it's in blue, not because it's any kind of alt structure. So this C wave should be a 5 wave move up. And because we got pretty close to a 764 here for the A wave and are holding a nice high expanded flat for the B wave, we should really have no problem getting up to the 2300 region. And that should be a nice 5 wave move, which does not need to be a diagonal. So it can just be a regular old impulse. And in fact, a nice old impulse would be the most ideal. Zooming into that structure, looking at the rest of this expanded flat for the ABC inside this B wave. Let's get rid of some of these fibs here, just to crowd the chart a little bit less. So far we've gotten to normal fib extension. As far as exceeded a 100% extension and even gotten to a 123.6% extension in this C wave down. But so far we only have 3 waves. So we should get a 4th and a 5th wave to complete. But we do have what can count as an expanded flat as maybe a WX and ABC for a Y wave. So if we get over the 2020 region, that's when we have to really start looking at the structure to see if it looks like it is part of wave 1 already off of this low as all of the B wave, or if we still look like we're just an ABC, maybe just getting a little bit excited before it drops back down for one more low as ABC down for this 5th wave, ideally targeting the 1963 to 1952 region is my sweet spot there for all of the B wave. George, you don't have to write in all caps. I can read it. We are very careful about making arguments regarding correlation, because correlation works for a period of time and then all of a sudden it stops working. We're inverse correlation, and the fundamental arguments that argue one way for correlation when it's working sometimes argue the same way when it's not working. So it does not seem like a good way to try and base your investing decisions by looking for correlation. What I've often talked about is that we know that the Elliott wave structure is based on sentiment, and the same investor sentiment of fear and greed is at the root of all of the price movements, and they go through the same fractal patterns, and they have the same similar degree structures, and so they can be in phase with each other in similar cycles. And so sometimes things can seem like they're correlated just because they're at a similar place in a pattern, in a similar fractal pattern. But then all of a sudden, the bigger degree context is different, and so it gets to a point where that phase, that in phaseness ends, and then all of a sudden they go in opposite directions. So, if you're looking at things from the basis of Elliott waves, then you can say, okay, here's a period of time maybe where those could correlate. But I don't think that it is a good practice to try and regularly make those arguments. Silver looks very much like gold. It should be getting a fourth wave bounce and then a fifth wave of the C in this expanded flat for the larger degree B wave inside the same parentheses intermediate degree wave C that should on silver. There is confluence here. This is a normal fib extension, but one of the charts that I also do look at is the gold to silver ratio chart, and according to that chart, silver should start to really outperform gold a little bit, even though they're the same pattern. So getting a little bit more extension up towards the 32.50 to 32.625 region, I think would fit a little bit better with that. And again, I think most of us post either the silver futures, SI or QSI is how my continuous, the Q stands for continuous on a lot of my futures charts. Or Garrett will also post the spot silver and spot gold, that's the XAU and XAG. SLV, GLD, those are ETFs that are meant to follow the price movement. But there's a different subset of investors. They're not, Avi will tell you, read the prospectus. He just done some numerous articles on why those are maybe not good when you're looking at a longer term hold. They can be great for trading vehicles, but we're going to be applying the wave counts on the futures or the spot themselves. All right, moving over to the miners, very similar, smaller degree structure. Since the April high, well, I say April high, but we did make a nominal higher high like gold did for this B wave. But working on this ABC flat, expanded flat, can get a fourth and a fifth wave. Could have counted this as the fourth wave. I was counting this as a possible ending diagonal with an ABC for wave 3 because this looked more like 3 waves down. But there was a big drop here, and there could have been a 4 and a 5 hidden inside that wave 1. So it could just be a regular impulse, more like silver, and still get a fourth and a fifth wave down, ideally into the 32 region to complete that move. So I think we'll just add this little purple wave 3 here to fit that as a slight variant there to fit more of the silver. Because we should have bounced, if we were going to get this as a micro ABC of wave 5, really should have bounced from here. So this extension looks maybe a little bit more like 1, 2, 3, 4, and 5 of 3, and then a fourth and a fifth wave to complete that C wave. Now when we zoom out on the bigger structure, the only real difference off of this low from golden, well, there's a couple differences, but the same 1, 2, just at a smaller degree. But it's not a primary wave 5 that is in gold, and it was not a significantly lower low that silver made. GDX, the miners, and GDXJ also, held a pretty deep but a valid B wave as an A, B, C structure inside the primary wave 3 of a larger diagonal. Yes, QG is the natural gas continuous contract. Continuous just means that it rolls over automatically, and so I don't have to move my labels and onto a different chart. So the price will adjust when the contract rolls, but I keep the same chart. So sometimes it does create some slight differences in fibs and things like that because there's an adjustment in the chart. But for my purposes in longer term charting, I think it makes things much easier. So inside this C wave that is similar to the larger primary wave 5 that we were looking at on gold, just 1 degree behind it in a C wave of a primary wave 3, we have a similar wave 1 and wave 2, and then a start to the third. But we got 5 waves up and 3 waves down for GDX, and have another 5 waves up and 3 waves down as a 1-2 start to the third, so making this whole thing an impulse as opposed to a diagonal. So the structure here doesn't change any of that. The only thing is, and it's kind of nerdy, is that we're looking for a C wave to complete wave 3 in gold and silver, and GDX and GDXJ, we're going to want to see them get another 4 and a 5 to complete that same wave 3. So it will be interesting to see what is it that's happening there. Is gold and silver getting the same move as GDX, and then gold and silver just kind of rounds out and stagnates, while GDX gets the 4th and the 5th wave higher, and then they're on the same page for this wave 4? Or does GDX just run harder and get all of this 3, 4, and 5 to get to the same wave 3 target, when the metals are just getting the C wave up to a little bit more muted version? So that's the big difference there. But in the same smaller degree structure, we're looking at some eminent new wave setups in individual miners, and maybe another new one as a shorter term setup in GDX itself. We posted a lot of wave setups in March, even though we were only at a 50% retrace, and it was not clear if this was going to be all of the wave 2 or just the A wave and getting a B wave and then a C wave down close to the 2540 region for a 618 retrace. But there were a lot of things that looked very good as potentially all of the wave 2, and that would have been a decent bounce even if just a B wave. So we have a lot of wave setups that are still active, and we've just been updating them since that early March low. Yes, the continuous contracts for gold is still on, for gold and silver, I think is still in June. I'm not sure about natural gas, but that sounds right. All right, GDXJ is pretty much the same. So same, looking for a little bit lower probably, although it's not needed. But closer to 3760s is reasonable. Maybe it's another 4th and a 5th wave down. But looking great as this 5 up, 3 down for wave 1 and wave 2, and another 5 up and 3 down for the 1-2 start to the third. So stay tuned to that. It's going to be fun for the next couple months. All right, moving on. Let's talk about bonds, and then you guys can tell me what else I might be missing. TLT is a very awkward chart, and remember, you have to remember TLT is a combination of an attempt to blend the 30-year treasury and the 10-year treasury into a 20-plus year duration. So it also is traded by different investors than the people who trade directly in bonds, and represents a much smaller total volume of money traded than what is actually being traded in treasuries. So I think treasuries are the first place to look. Then you can sometimes look for some nuanced differences in TLT that maybe might influence the direction of the bond charts, but usually it's the other way around. So we have this really great structure to the upside as a start to a larger C wave or third wave. They got a little bit past the ideal resistance and then got even more past the ideal resistance. So there is a risk that this could have been either all of a muted C wave and we're starting a bigger B wave retrace, or it's just a very, very aggressive wave 1 of that larger C wave. But we failed to hold some previous opportunities to get a more immediate start to the parentheses lowercase Roman numeral wave 3. That's a minuet degree wave 2. So that's filling out as a deeper and wider retrace, which ideally is this WX and an ABC for a Y wave trying to complete into this 128 region. But that could just be the third, the micro 1, 2, 3, and getting another 4 or 5 of a C wave. The problem with this is that while the 30-year is still holding above even a 50% retrace, TLT is already struggling to hold the 764 here. So it really needs to bottom soon in something more like this green A, B, C for the Y wave for TLT and get more than just a corrective bounce, or it's going to start to run into some trouble. The 10-year chart has even more room and was almost trying to get a fifth wave up off of this low as the ABC for wave two, but it's getting forced into the same more expanded, wider flat as the WX, and a Y wave would be the most ideal, holding in this 114 region, but could get that micro 4 and micro 5 to get 5 waves down in the yellow C wave. So that's what's implied here. I know there's no C wave shown. I do that a lot with the alts that I show. I try to put as little extra stuff on the chart than I think is needed. So that's why for that alt of the two here, I only have a few of the notes because the A, B, and C are the same as the 1, 2, and 3. So I only put the extra 4, and then the wave 2 here implies that that's the end of an A, B, and a C for a slightly alt version of the same wave 2. So hopefully that's a good illustration of the way that I use some of those alts. Instead of putting all of that on the chart, which would make it kind of crowded, this way you could just kind of see the more clear structure that would be the more ideal bottom. We don't usually try and rely on a WXY, but I think that there's kind of a need for that to be the operative count in this case, because when we look at TLT here, you'll see that it is already closing in on this 764. So it does not have a lot of room to get lower here and then another fourth and a fifth wave. That could easily put it in danger of breaking under this low. And maybe at that point it would count better as a bigger flat for this. But then you start to get into some feedback loop issues where if this is an alt of this B wave now, instead of being an alt of the 1, 2, then maybe that starts to drag on the other bonds and forces them to do the same, but TLT is already lower, so it starts dragging it down even deeper. So running out of room for this to hold in the most bullish potential that we see. All right, let's move on to the dollar, and then I think we're pretty close to everything that we normally cover. The dollar could easily be all of this C wave, but I think you can squeeze in another 4 and 5 and take it up closer to 103.60. You can squeeze in 1, 2, 3, 4, 5 waves up for a C wave, but I think that this might look a little bit better with more of a 4, 5 here, like this. 2, 3, 4, and 5. Doesn't have to get all the way up to the 103.60. It could get a pretty muted fourth and fifth wave just nominally over the 103 region, but it does look like that can get a little bit more of a 4 or 5. But certainly anything under 102 starts to break support and could be the start of a third to the downside in a bigger primary degree C wave. We have 5 waves down as a wave 1 of C and filling out this ABC flat for the wave 2 of C. Declining volume does not always mean that something's topping. It can just mean that you're getting some weakness or some consolidation or just a pause, but it doesn't necessarily mean that it's a top. I mean, sometimes there could be distribution that's happening under the surface, but I don't think that volume is the only indicator of that. Any other questions before we end here, guys? Nope. All right. Well, I'll go ahead and get this uploaded for you, and I will see you next time. Have a good night.